I'm back again, and I have with me Dr. Prasad Kulkarni, who will ask me a few questions regarding the past two videos on which I have talked about. So here is Dr. Prasad Kulkarni. So please continue with your questions.
So Rushil, you said that an investment bank is different from a routine bank.
Yes.
Is it by any chance possible that an investment bank can be an investment bank and at the same time also act like a normal bank? You know, normal bank like ICICI or State Bank of India.
Yes, so actually all the investment banks, the majority of the investment banks in America, as I said, only most of the major banks, investment banks are located in America. So except for JP Morgan and I guess Goldman Sachs, all of these investment banks function also as commercial banks, also as investment firms, and also as brokerage houses for retail investors. So I told you that investment banks deal with big clients. So they also function as small time firms. Some of them, not all of them, not JP Morgan. So you must have heard about Citibank Group, which is a very sophisticated investment bank. And you can also see a number of their branches in Pune also. And they are commercial banks. So obviously an investment bank can exist as an investment firm also, as a commercial bank also, like Barclays also.
Right. Thanks for clarifying that. Then I had one more question. That you said that one of the core functions of an investment bank is equity research. Now I'm sure they must be doing a lot of research with a lot of analysts and who are going through a huge amount of data.
Yes.
But what do they exactly do with this data? What comes out of it? How is it utilized?
Okay, that's a very good question. So in the last video, my first video on the topic investment banking, I explained in detail what the equity and research wing actually is. So these equity and research analysts, they have a lot of, they are divided between stocks. So there may be a pharma department, an IT department, the various industries in the stock market.
Sectors, you mean?
Sectors, yes. And every trader, every analyst is associated with a single stock. And that analyst, he or she study one single stock. So there are thousands of analysts across the globe for one investment bank. So with that amount of data, they release this data publicly. You and I can access this data very easily. So it's free. This data, they give it for free. So that is not how they earn money. They cannot earn money by giving it out for free. So what these guys do, they go to the mutual funds, they go to the very high, the high investors, the FIIs,
you mean the high net worth individuals?
Yes.
HNIs.
Yes, and the the mutual funds, then you got the provident pension funds, then these big insurance corporations.
Like LIC.
Like LIC, the big giant. So these investment banks, the equity research analysts, they go to these people and they show them the data. They do not sell the data, they just show the data. And they try to convince them to buy the stock or buy the stock on which they have researched. So if the mutual fund agrees with them, if the mutual fund thinks that okay, this is a good buy, and if they will comply with the buy or sell recommendation of the bank, and if they say that okay, this thing is good, your analysis is good, and we agree, and we want to execute the deal, we want to buy the stock. So this is done by the sales and trading division. So this is the function of the equity research guys. They make the data public, and they also buy stock for themselves also. After this data is released, they may also buy stocks for themselves, for their own bank. And they give the data public, as I told you, and also to the mutual fund from which they earn advisory fees through the sales and trading division.
Okay, and this sales and trade that happens, does it happen in a stock market just like we people buy shares?
The stock market, the market in which we buy shares is a secondary market. So let's say there is a company.
Yeah, you mentioned about primary market and secondary market. It is really very confusing for me.
Okay, I'll just explain it to you. So in a primary market, what happens, I won't talk about the stock market in particular. In a primary market, let's say a vegetable market. A vegetable market is not a primary market, but I'm just giving an example. I buy from the producer, from the farmer. I buy from the farmer and I sell it back to the farmer only. So there are only two people involved. It is me and the producer. And so there are just two people involved in the primary market. But in a secondary market, I will buy from the farmer and I will sell to someone else. The one who buys from me, he will sell to someone else, another person. So that is the secondary market, that is the primary market. So in the secondary market, I do not buy the stock from the company. I buy the stock from any random trader in the market. So
any shareholder.
Any shareholder. So there is a concept called buyback. So in the buyback offers, the company buys again from the shareholders. So it is the company which buys, but in the market in which we trade, it happens extremely fast. You buy, if you just click a button and the stock is sold or bought.
Correct.
So that is the secondary market. You do not buy from the company. You buy from the traders in the market, other shareholders.
Okay.
The primary market is the one. Primary market is used for generally. It is not used by people like us, but it is used by asset management companies, AMCs or mutual funds. Mutual funds are investment banks. So the mutual funds, they buy directly from the company, and that is where the investment bank helps.
Okay, so that is what is primary market.
Yes.
So this primary market happens even before a company comes out with its initial public offering.
That may be a
IPO?
that may be a private placement. But if the company, it may actually depend. If the company has done its IPO, so you've got these venture capitalists, these angel investors. They do not even before the IPO is done, they invest in the company. They buy the shares, right?
Correct.
So that these are private placements.
Right. So they are not publicly traded shares.
No, they are not publicly traded.
So they are held by private people.
They are held by the company's original shareholders.
And this is what primary market is.
That is what primary market.
But this must be holding true for very small private companies, which are held by where the partners are very few.
Yes.
But what about, let's say, a company like Reliance Industries or let's say Tata Steel?
Okay.
So these companies are obviously public limited. Their shares are in the market.
Yes.
So can there be a primary market even for these companies?
Yes. So actually, why the reason for primary market is that if I go out in the market, the secondary market, and I want to buy $1 billion of stock, you won't find a seller. $1 billion, who will sell?
Right.
Retail investors don't have that much amount of money. So that is the reason why they go to the initial shareholders. If they want to sell their share, if the shareholders want to sell their share, the original, the head shareholders, the big. So that is why they use the primary market, because they want to execute huge deals.
Okay.
If they wanted to execute small deals, then secondary market is the best place.
Right. So they don't, and of course I'm sure that giving it into the secondary market must be very time consuming and very tedious process.
Yeah, because you don't find the buyers or sellers.
Correct. But then there must be a lot of regulatory process
SEBI,
that must be behind all these public offerings.
Yes, the regulator in India, which is SEBI, Securities and Exchange Board of India, and in America, Securities and Exchange Commission. They work only in the secondary market. They don't have any regulatory power in the primary market.
Okay. So the process of selling shares or stock in the primary market must be much more simpler,
much more
easier, much more fast.
Yeah. So that is what the investment banks do. They find the buyers and the sellers and they connect them. And they get the advisory fees.
Correct. So even if a public limited company is there which has shares in the market, still they can again come out with their offering in the primary market. And through the investment banks, they can still get hold of the mutual fund and directly sell it to them.
Yes, correct. That's correct.
Now, when somebody buys shares like this from primary market, can he still sell it in the secondary market?
Yes, he can do that. But still, again, it's the same problem. You buy $100 million shares, you want to sell same amount. Okay, it may happen that he wants to sell a part of them. Then he can obviously trade them because they are shares. Shares are not primary or secondary. Shares are shares.
Correct.
You can sell them anywhere. In both the markets.
So in both the markets, the shares will go into your demat account.
Yes, but not for the high net worth individuals. They don't have demat accounts. They have accounts in these investment banks. Not accounts exactly. They trade in the investment banks. Trade with the help of the investment banks.
Okay. That's very helpful, and so that actually clears the doubt about primary market and secondary market. So on this Bombay Stock Exchange and National Stock Exchange and all that, they are basically secondary markets.
Yes.
Right? Yes. And there is no such thing called as primary market, meaning there is no place called as primary market. It is just between the company and the...
It's not a market. It's
as such.
As such, that's correct.
Excellent. Thank you so much, Rishi.
Thank you.
All the best.
Thank you. Okay, so before we start, I would like to tell you a story which I heard just a few days back. So a few years back in downtown Pune, there lived a guy, and he had this very ailing horse. And the horse had some problem. He had grown old, and there was some problem with the horse. So he went to the vet, and he asked, doctor, what's wrong with my horse? Sometimes he's limping and walking, and sometimes he's broadly jumping. So the doctor told him, whenever he's jumping broadly, whenever he's running fine, sell him. So that's what is the basic funda of investments. So whenever your investments are jumping around, sell them. When they are limping, when they are ailing, keep them with you. Okay, so today I have with me Romil Kulkarni, who will ask a few questions to me. Please, Romil.
So Roshil, I had a question that you said that any graduate can work in an investment bank, but how is that possible?
Okay, so by any graduate, I mean to this field. So math graduates, statistic graduates, economics graduates, accounting graduates, these are the ones who go for application in an investment bank. But as you say, for example, I don't mean all graduates as in literature graduates, science graduates, but it can happen that suppose there's a science graduate from an IT graduate, BTech for example, from any institute, and he's also interested in stocks, in the stock market. So he may be appointed in the in the equity research, the IT division of the equity and research. So we only analyze IT stocks only and only if he has a proper knowledge of the stock market. Else he will not be appointed, because whoever wants to go to the investment bank, they will go. There is no degree as such. Only if you have knowledge, only if you have courage, love, then you will enter into a bank. Okay, so here we have Ritu Kulkarni, who will also ask me a few questions regarding investment banking. Please.
So Rishi, can a normal person like me open an account in an investment bank?
Okay, so I have already discussed this, that investment banks are different from investment firms. You want to trade, if you want to trade in stocks, if you want to trade in securities, any other type of securities, so you will open an account in an investment firm in which they deal with clients like you. You are a small client, you are a retail investor. So if you want to trade stocks, then you will open an account in a brokerage firm, a demat account in a brokerage house or an investment firm. But investment banks, they are meant for big people like mutual funds, or like very high net worth individuals like Warren Buffett and other investors, big CEOs, pension funds, insurance companies, government organizations. So they are meant for such type of people, and as such you cannot open an account in the investment bank. You cannot have an account like a normal bank. You cannot store money in that bank. So if so that you cannot open an account. So they just execute the trade for you, and you can be their customers, but you can't open an account.
So if I be a CEO, so can I open an account?
Okay, so if you are a CEO and if you want to execute a large deal of stock, if you want to buy a very big stock, $100 million for example, then you will not open an account. You will just approach the investment bank and say that just execute this deal for me, and then they will buy buy it or sell it for you, and then they will charge some fees for that. So that is they are just like investment firms, but they are just bigger investment firms dealing with big clients. So that answered your questions?
Thank you.
Thank you.